So West Red Lake Gold Mines, this is a company that came into existence. I will make a lot of forward-looking statements. That's what presenters are supposed to do. I will make so many that it takes 2 slides to get through all of the disclaimers for my forward-looking statements. Okay, so West Red Lake Gold is a company that came into being. The thought for it came to be about 2.5 years ago, when 2 guys sort of joined forces who hadn't previously. One of them was Frank Justra. I'm sure many on the call are familiar with Frank's history. One of the things that Frank is really good at is timing. He had been out of the gold, the mining industry as a whole for about 7 or 8 years. But then about 2 years ago, he decided that it was time to step back in because he's a strong believer in this gold bull market. He saw it starting 2 years ago, and he believes that this is going to be a very significant gold bull market. So he wanted to start up his sort of mining company to ride this gold bull market. So he had that vision, and that's when he connected with Shane Williams. So Shane is the president and CEO of West Red Lake. Shane is a mine builder. He spent 25 years building mines all around the world, in Turkey, in Greece, in Sweden, in Quebec, in British Columbia. And he's very good, experienced mine builder. He was senior on that front for Eldorado, building the Lamaque mine in Quebec and those mines in Turkey and Greece. And he was ready to take on a new challenge as well. So he connected with Frank, and they both agreed that the best way to provide returns to shareholders in a rising gold market is through production growth. So either going from 0 to first production, so starting your first mine, or significantly increasing your production profile if you're already a producer, because then you get the leverage to gold that is a rising gold market that gold producers should generate in a rising gold market, but you double that by giving investors rides on the golden runway, as we call it, which is that phenomenon where a share price should re-rate higher when a mine goes from needing a bunch of capital, which is what happens when it's being built, to producing gold, and therefore is valued in the market for the money that it's making instead. So that's the genesis story of West Red Lake. I'm going to get into the asset in just a moment. These are some of the key points to take away right now. The Madsen Mine, which was the fundamental asset that West Red Lake acquired to start that, to bring that dream alive. I will go through the details of that. That mine, we've been pushing it towards production for 1.5 years already, and we will produce gold at the Madsen Mine next year. There's not very many new gold mines entering production in 2025, especially new gold mines owned by smaller companies where the leverage for that new production is usually the biggest. So I think that that's an important consideration for investors looking for leverage in the gold market. The Madsen Mine is fully permitted, so there's no permitting requirements or risks related to the Madsen Mine. The build is largely complete. I will dive into that story, but the prior operator did invest $350 million in the years just prior to our acquisition and built most of what's needed at the mine site. And we have, in the last 1.5 years, already invested another $80 million. So most of the work and money is already done. We will put out a pre-feasibility study outlining what this mine is going to look like in the next month. I think that's going to be an important event in the market because there's been a little bit of uncertainty about what this mine will look like. We've been pushing towards production so fast, we haven't been able to put out the study that explains everything that we're doing. It's the nature of what these studies are. That study is imminent. Also, we just, even this morning, announced the close of the financing component of a $68 million mine restart financing package. So that is a combination of debt, a $35 million US debt facility with Nabari, and a bought deal financing that we just closed. It was only open for 4 market days, and we closed it this morning. That puts $68 million in our bank. That covers our cost to complete, including working capital through ramp up. That is the money that we need to get this mine into production. Really important de-risking step that we can chat about a little bit more as we go through. Okay, so this vision to provide aggressive production growth in a new gold mining company to provide investors leverage to the price of gold, well, it required a foundational asset. And West Red Lake Gold found that in the Madsen Mine. So this is our land package. The Madsen Mine is the lower red package that says Madsen in the middle of it. The company that was used for the acquisition already owned that upper red package, the Rowan land package, which is useful. It also has 300,000 ounces of gold delineated in a fairly near surface deposit that grades better, 50% better grade than the grade that we have at Madsen. So Rowan is a great supplemental asset that we are working to permit, and we have a vision to use that as mill feed at the Madsen mine down the road. That's something that we're progressing. But for now, the majority of our focus is absolutely at Madsen. What is Madsen? Well, Madsen is a mine that operated historically. The Red Lake District, which has produced some 30 million ounces of gold from very high grade veins, is the reason that the town of Red Lake exists. Gold was discovered there 100 years ago. That includes gold that was discovered at Madsen. That mine operated for several decades and produced 2 million ounces of gold from rock that averaged 9 grams per ton. This is high grade district. Those old timers did some great work mining that gold and exploring. They did one drift way out to the side and drilled down deep, and they discovered something called the 8 zone, which is even higher grade than the rest of the resource that's at Madsen. And they really liked that enough that they drove a shaft all the way down to 8 zone, which is at 1,250 meters depth. So they did some great work, but by the time the 70s came, the mine was deep. It was expensive to keep it dewatered, and the gold price was terrible, so the mine shut down. A few more kicks at the can along the way. The one that matters is Pure Gold. So Pure Gold owned the asset from 2015 to 2022. They did a lot of really good work. They did 180,000 meters of drilling that defined the resource that is still the resource that we're working with today. And once they defined that resource, then they engineered a mine, they permitted a mine, they raised the money, they built a mine, and they started operating. Unfortunately, they made some missteps along the way, and that mine entered the bankruptcy proceedings after only 14 months of operation. That failure for Pure Gold, and unfortunately, certainly for Pure Gold shareholders, was West Red Lake's opportunity. So the asset, the Madsen mine, went to Sprott Resource Lending, who had provided the debt for Pure Gold to build the operation. They had senior security, so they got the asset, and West Red Lake stepped in and bought it from Sprott. We paid $6.5 million in cash on that $350 million cash that had been invested in the prior 7 years, and also granted Sprott a 1% NSR and converted their debt to equity. They remain, after several financings, about a 19% shareholder in West Red Lake Gold. This is what we bought, a bird's eye view, so to speak. You can see the head frame sticking up of that shaft that goes all the way down to the 8 zone. The blue building is the mill. And underneath all of this sits our resource. The indicated count is 1.7 million ounces, averaging 7.4 grams per ton gold. It's a good resource. And the mill, before I go into the things that didn't work so well at the Madsen mine, I want to comment on the thing that did work really well, which was the mill. The mill is a very standard processing flow sheet, and it achieved 95% recovery during those first 14 months of operation. It worked really well. We're very happy to have this piece of infrastructure. I mean, replacement cost on this mill alone would probably be about $400 million plus permitting time and all of those headaches. So really excited about this mill. Now I get to the point where I embrace the elephant in the room, right? This is a mine that failed 2 years ago, October of 2022. So what are we doing differently that we believe is going to make Madsen work this time? Well, fundamental to our approach is a lot of definition drilling. I'm going to run through the 3 images, the stacked images on the left of your screen there. So if you look at that blue ribbon, that was the resource that Pure Gold built their mine based on, a fairly straight and, in their minds, continuously mineralized ribbon of mineralization. As they got underground, they realized that that was not sufficiently accurate. They did some geologic remodeling, and they ended up with the purple shape. So a bent ribbon, some folding in there. Great. The thing is that Pure Gold, after defining the resource, did not carry on and do very much what we call definition drilling, which is where you hammer the resource that you already have defined with a whole bunch more holes to make sure you know exactly where the gold is. And that's really important in a system like Red Lake, where these are narrow veins, high-grade gold, but it is not continuously spread through that purple ribbon. It is in lenses within that purple ribbon. What definition drilling does is it as in the second image, hammers that purple ribbon with drill holes, and then in the third image, the bottom of the stack there, defines those lenses. That's what the red blobs are. Those are the places where the gold actually sits. Our fundamental approach is to mine the red blobs and not the entire purple ribbon, because pure gold, through a combination of mining the entire ribbon, not having a good understanding of exactly where the gold was, and some mining method mistakes, they ended up delivering material to the mill that was less than half the grade they expected. They expected 8.5 grams. They averaged like 3.5 grams. So that was a really fundamental problem. Definition drilling is our approach to managing that problem. And we have done 43,000 meters of definition drilling in the last year, hammering the resource that we already have defined and tightening the drill hole spacing from 20 meters to 6 meters. If you think about how much data we're adding to the geologic model, it's a lot. So we're confirming the zones. You can see lots of ellipses there on the drill holes coming from the drill holes that are in this cross section going across the screen. And you can also see drill holes that clearly came at this part of the resource from other angles. Those are confirming known mineralization. You can also see that it's nicely extending. We've got some nice purple hits, higher grade hits that are extending the resource model. That's not happenstance. We chose the areas to focus our definition drilling on early through a combination of areas that offer good tonnage and grade potential, and where we know that there was like hits nearby that weren't quite involved in the resource. So we knew that there was potential to do this. We're also sometimes finding new zones, bonus of doing this kind of drilling, definition drilling in a high grade system like Red Lake. The dashed line there shows outlines where there have been several hits right off the collar of those two fans of drill holes that we're testing the resource that's outlined in the magenta and yellow, but we're defining a new zone. Kind of a bonus, but that's the kind of system that you get in Red Lake. Okay, so this looks like a super boring slide, and you can argue that it's a boring slide, but when you want to talk about what we're doing differently, this sums it up, and I'll go through it very quickly. But I said you can't just mine the mineral resource. That's essentially what Pure Gold did. I said you need to do more. The sequence of blue bubbles there is how we incorporate the information and turn it into a stope book. So we take our mineral resource estimate, we add the numbers from the definition drilling, and that gets to the short-term model. Then we add more manual information, what the drill core log shows, what the underground looks like, are there chip samples, other information that we can grab. Then we apply a confidence requirement, and then we get to mineralization, upon which we can confidently and accurately design stopes. Having an accurate, confident stope book, stopes being the places that you're actually going to go mine underground, is just fundamental to successful underground mining. I'm happy to talk to anybody about this process at length, but for now, I will leave it at that. Pure Gold's first problem was delivering mineralization to the mill that did not grade as expected. Their second problem, though, is that their costs were much higher than they had anticipated. And one of the big reasons for that was that there were several capital projects that they didn't do proactively that led to an inefficient operation. The connection drift that we are driving remedies one of those situations. Through a series of events, they ended up mining mostly from the west portal, even though they had started defining an east portal. The east portal is a much larger portal. It's easier trucking. It's smoother. The grade is better. You can get bigger trucks in there. But they ran out of money, and so they went to the historic west portal, and they ended up with two sides of the mine that were not connected. Taking mineralization out the west portal is a little awkward. It's steep, it's windy, it's small. You can only get 30-ton trucks in there, and you have to go across two public roads. That means you have to dump the ore from underground trucks and put it into insured surface trucks. The west portal is an inefficient portal for moving mineralization, so we are driving a 1.2 kilometer drift that connects the two sides of the mine, so we can come out the east portal right beside the crusher and just alleviate those inefficiencies. There's a list of other projects that we have underway at site that are also to underpin an efficient operation. A mechanical shop, a permanent crusher, a camp. We've done propane reticulation. We've done a tailings dam lift that's proactive. There's a whole bunch of projects that we are doing, like I say, to just do everything that we can to underpin an efficient operation, because that's fundamental to mining success. Also fundamental to mining success is doing everything you can before you start mining to know exactly how to mine. And that's what our test mining program is really about. We're underground, we're slowly starting to mine. There's a range of environments underground at Madsen: fresh rock, near filled stopes, near empty stopes. By test mining across that range of environments, we practice and we make sure that we understand exactly how to mine in those environments. We may also be able to unlock some resources that were excluded from the resource estimate because test mining had not been done to demonstrate that those resources were accessible. And the test mining process is generating bulk samples that we will process when we start up our mill, and then we'll be able to do those reconciliation calculations to see if the mine material is what we said it was going to be. That's going to be another big de-risking event. This is a waterfall slide that pulls all of that together, all of the work that we're doing. The gold dashed line is that pre-feasibility study that I mentioned. We will put that out pretty soon. In the next month, that study will come out. It will define what it is that we're doing. There's three, I think this slide only a few days ago said 3 big catalysts ahead. Now it's like 3 big catalysts that are underway. And those catalysts are that pre-feasibility study that's really going to define the mine and the cost to complete. Those have been undefined up till now because we've been pushing so fast, we haven't been able to define those. That study is about to come out, and I think will help the market understand how close we are to producing gold. Final capital, we just accessed that major de-risking event to take away, to show that we have the money that we need to do everything that we say we're going to do. And then once these things are both in place, then we expect the board to support an official restart decision. This kind of like the other slide that I said looks boring. There's certainly a lot of words on this slide, but mining is about mitigating risk. I'm happy to talk to anybody who wants to talk through this slide. It shows common new mine risks, some examples of mines where those have happened, and why those risks either don't pertain to Madsen, not all risks pertain to all mines, or how we are managing those risks. And I think this is really also fundamental to our team's approach to mining. Why go through all of this effort? There's 2 reasons to restart the Madsen mine. One of them is just to produce gold into this phenomenal gold price environment that we're in, and for our investors to earn the re-rate that you get when you go from spending money, which is what we're doing now to get this mine going, to making money by producing gold. These are just different ways of illustrating that golden runway re-rate. The other reason to put this mine into production is to see what else we can turn Madsen into. The 8 zone that I referenced is one enticing area that is just begging for more exploration. I mean, you can see the resource there in purple. That resource averages, the indicated resource averages 18 grams per ton. Remember, our regular resource averages 7.5. So, you know, it's a really enticing zone, and you can see that there's some hits down there that deserve follow-up to see if we can extend that zone. There's a shaft that goes all the way down to it. If that zone can be expanded significantly, adding, you know, making 25% of the mill feed, something like that, 200 tons per day, be material that averages 18 or 20 grams per ton instead of 7 grams per ton, that's a significant amplifier would be a significant amplifier for a mine like Madsen. There's also lots of potential to just find more at this underexplored land package. This again could be a long discussion. I'll just focus on upper 8 for now. We have this regional exploration program underway. Upper 8 is the only area from which we've issued results. This is us tracking the slightly different rocks that the 8 zone lives in, up dip, much closer to surface, where a structure crossed it that was sympathetic, so at the same angle as the 8 zone. 2 of the first 3 holes into that upper 8 zone hit gold, really nice numbers, 44 grams, 20 grams. That's an exciting opportunity. Let's see what else we can find that has the potential to turn Madsen into a larger operation than the one we will outline in the pre-feasibility study that's imminent. Then there's lots of ongoing potential. Red Lake systems go down deep. These are some of the intercepts that are down plunge of our defined resource. Lots of opportunity to chase that opportunity down dip once you're down in the mine, making money and have access to drill those areas effectively. This is our capital structure because we closed a financing this morning. This is now out of date and I didn't have a chance to update it this morning. We're now closer to 310 million shares outstanding and 135 million warrants. I'm calculating those numbers as I speak. And we have a lot of great shareholders in the book. VanEck built their position on market and through financing. Sprott, like I said, remains at about 19%, and Frank remains a significant shareholder in the company as well. This slide I already went through. These are the key things that are going on. I think I've probably talked for too long. I tend to do that, so I apologize. But thank you for your attention, and Arlen, I'm sure you have some questions for me.
Oh, I do. I'm gonna put my glasses on so I can read them. Gwen, that was super dynamic. Awesome.
Thanks.
Yeah.
I like the story. I do.
Yeah.
There's lots to say.
Well, you got to if you're moving from where you were to like a new career path, right? So you got to love. Do you have a map of the upper 8 zone?
I don't know. We've
Oh,
only got 2 hits into it. I guess I could actually pull up I could pull up the news release that has a little bit of a schematic on it. I can do that pretty easily. In fact, I have the press release open right here. Of course I do.
While you're looking at that, I really appreciated that mine risk slide.
See, some people love
that's really cool, and I think it just really shows just like how much can go wrong in mining.
Yes,
Like
right?
it feels endless sometimes, right? Like it's just, this is a high risk business, right?
Totally is.
You don't know what's underground. I appreciate also like the way that you want more and more data, right, from this type of deposit. And I wanted to talk to you about like what's the like, obviously you guys had to look at the cost benefit analysis of that, right? Because that's going to triple your exploration costs, but it's going to de-risk your production scenario so much more.
Yeah.
So like,
And I mean,
I think
yeah,
that,
it's sustaining capital. And I mean, the fundamental characteristic of a successful high-grade underground mine is that especially one that's like a vein mine, if you have a slightly more consistent style of mineralization, maybe it's a VMS or something, then maybe you don't need quite as intensive drilling. But when you're talking about high-grade underground epithermal veins, you need to drill the stink out of those things, because if you don't know accurately where the gold is, you're going to end up mining waste, and that's really a problem. So yeah, there is a cost benefit there for sure. And I will say, I mean, Pure Gold tried to put this thing back into production when the gold price averaged probably $1,700 or $1,600 US, right? We also have the benefit of a much stronger gold price environment. So, there's a bit of wind in our sails, which is the reason that the company was launched. So yes, for sure, it does cost, but it's essential. I don't think there's any point trying to restart Madsen if you're not going to do 6-meter drill spacing. Are you seeing this this cross section of the upper 8? Okay, I thought so.
Yeah. No, we are.
So this just shows the 8 zone, what it shows, and I mean, this is a cartoon really, right? We only have 2 intercepts into upper 8. But this shows that purple shows that ultramafic rock unit. When I say 8 is geologically distinct from the rest of the mineralization at Madsen, it's because it exists in this other rock type. It's not the volcanics, it's in the ultramafics. It's a softer rock, so you imagine gold can sort of pool in those rocks a bit more. The high grade zone at the Red Lake mine, which is what turned Goldcorp into the company that it was. That discovery changed that mine from 50,000 ounces a year to 500,000 ounces a year in just a few years, put Goldcorp on the map. That was very analogous to this. It was also in the ultramafics. It was also 3 or 4 times the grade of the rest of their deposit. That's why we're so excited about the 8 zone. And yeah, the 8 zone's deep. It's hard to explore. We still need to do development out so that we can drill down and explore the down plunge potential. But really wanting to know more about whether there's more 8 zone was one of the reasons that our geologists were like, well, what about up plunge? Can we find this thing up plunge? So it was really exciting when 2 of the first 3 holes returned good hits, and we then dedicated a second surface drill rig just to this. I was just talking to our geo this morning. I think we're about 9 holes in. Haven't gotten any results back from those other holes, but we're excited about the possibility of what we might find here.
Yeah. And when you start attacking these zones or these lenses that are like 700, 800 meters deep, I'm assuming you're drilling from underground.
So the upper 8 is actually only about 300 meters deep. That's why it's so exciting. So that one's being drilled from surface. The 8 zone, which is 1,200 meters deep, we would absolutely drill from underground. And when I say there were some kicks at the can prior to even Pure Gold, Claude Resources was the big one. They were a little bit like moths to the flame of the 8 zone, and they tried to do a bunch of drilling of the 8 zone from surface. Pure Gold did as well. It's really hard to drill a tiny zone that's that deep from surface. It's really hard. It's costs a lot. It's not very effective. So yeah, that's we so want to drill the 8 zone. Oh my gosh. But we got to get down a little bit further, get out, get the right angle. We will do it next year. But for now, we're pretty happy to have hit into something that's only 300 meters deep that looks maybe similar.
Yeah, no, that's exciting. Because I think it would be tough, correct me if I'm wrong, you know, if you're drilling down that far from surface, super expensive, and your holes are going to deviate.
Absolutely. That's why.
Right.
And
So
the
like you
8 zone
can't
is
even get
physically
caught.
just a small thing. Yeah,
Yeah.
it's hard to hit a small thing when your
And
holes are deviating and your holes are that deep. Yeah, absolutely.
it's hard to get drill control on that. Awesome. So you just closed a bunch of money. Can you just talk about the structure on that really quickly? We got like about 2 minutes left here.
Yeah, for sure. So the money that we accessed is a US $35 million debt facility with Nabari. Half of that, it's a 40-month repay. Repay doesn't start for, I think it's 12 months, but I might have that number wrong. And we only repay half of capital in those 40 months, and then the last bit comes right at the end. So we don't have any debt on the asset at this moment. So it's reasonable for a mine to take on some debt as the final piece of capital. The complement to that, it was a financing. We announced it as a $20 million bought deal. It was immediately upsized to 25, and we closed at 27 just this morning, and that closed very quickly. So we were really gratified to see the response to that market. In fact, we had to. It felt like olden days. We had to cut a lot of people out, which was.
Been a while, hey?
You don't want to say no to people, but at the same time, we expect this stock to be worth more in a year. So we also didn't want to take more money than we had to.
Yeah. Well, you certainly got timing correct, right? So getting back into production when gold prices are doing what it's doing should certainly benefit your shareholders. So
Yes, that is the fundamental premise for sure. We want to deliver this re-rate as a producer in a rising gold market. And then, to be honest, the vision is to do it again. The vision is to then acquire another asset and repeat the feat. That is absolutely what this team is all about, and we're already on that hunt.
yeah, they certainly got a track record.
For sure. And within Frank has that track record. And here at West Red Lake, there's a really strong mine builder team, which is not super common in mining, right? We're sadly short of deep mine building and operating expertise in our industry. So that's a major strength of West Red Lake, is the ability to do this technically.
Supply chain starts with education, and there's not been enough mining geologists or engineers going through the system in the last 10 years to replace these experts that have been building these mines for the last 20, 30.
Absolutely. Right? I mean, that's the nature of our unfortunately cyclical industry. It's hard to convince people to go into geology when they might finish their degree and enter a 6-year bear market, right? It's tough.
Sure is. Yeah. Gwen, great to see you.
You too.
Yeah,
Awesome.
great chat. Congrats on everything. And you know, I am a shareholder and watching you guys deliver. So happy.
Awesome. Well, thanks for the day. I've been watching the other presentations. Always a great day. So yeah, carry on. And thanks everyone for your time and attention.